And just like that, the biggest asset manager on the planet is no longer the biggest Bitcoin holder. BlackRock has been dethroned, not by another fund, not by a country, by a single software company in Virginia that nobody took seriously 6 years ago. Strategy, the company you used to call MicroStrategy, now owns 815,061 Bitcoin. That's more than BlackRock's iShares Bitcoin Trust. That's roughly 4% of every Bitcoin that will ever exist. And today, on April 24th, the man behind it all, Michael Saylor, looked at the market and said 3 words: winter is over. If you hold Bitcoin, today is a day you need to pay attention to, because what just happened isn't another headline you can scroll past. It's a structural shift in who owns Bitcoin, how it's being accumulated, and what's actually going to drive the price from here. We're going to break down exactly what Strategy did, why Wall Street is suddenly throwing 9-figure checks at them, what Saylor's winter is over call actually means, and the one risk nobody on crypto Twitter is talking about. Let's get into it. First, the headline number. Strategy now holds 815,061 Bitcoin. BlackRock's IBIT, the most successful ETF launch in history, holds 802,824. So Strategy is ahead by about 12,000 coins. That sounds small. It's not. It's the first time since the second quarter of 2024 that any single entity has held more Bitcoin than IBIT. And IBIT is the same fund that became the fastest ETF in history to reach $70 billion in assets. Getting overtaken by one corporate treasury is a serious symbolic hit. So how did Strategy pull this off? Aggressive accumulation. Brutal, relentless, daily grind buying. Between April 13th and April 19th, Strategy bought 34,164 Bitcoin for $2.54 billion. Average price, $74,395 per coin. That's their third largest single purchase ever. It brings their total cost basis to about $61.5 billion across 815,000 coins, at an average price around $75,500. With Bitcoin trading near $78,000 today, the entire position is barely above break-even. They are not buying high. They are buying through pain. Here's the part most people miss. In 2026 alone, just the first 4 months, Strategy has added almost 80,000 Bitcoin. BlackRock's IBIT, with all its institutional pipes and $8.4 billion of inflows in Q1, only added about 23,000 Bitcoin in the same period. Strategy is buying Bitcoin 3.5 times faster than the biggest spot Bitcoin ETF on Earth. And they're doing it while Bitcoin is down nearly 40% from its all-time high of $126,000 last October. So how are they funding this? This is where it gets interesting. About 86% of that $2.5 billion buy came from selling something called STRC preferred stock. Don't let the name scare you. In plain English, STRC is a special class of shares that pays investors an 11.5% annual yield. Strategy issues these shares, raises cash from yield-hungry institutions, and uses that cash to buy Bitcoin. They still have about $19.5 billion of capacity left in this program, so the buying is nowhere near over. Saylor's stated goal is 1 million Bitcoin by the end of 2026. They're less than 200,000 coins from that finish line. Now today's catalyst. Capital Group, one of the largest institutional money managers in the world, disclosed that its American Fund's Fundamental Investors Fund just bought 4.32 million shares of Strategy. That's a $747 million bet in a single disclosure. On top of that, Cantor Fitzgerald raised its price target on Strategy to $212 with an overweight rating. The stock jumped 9.4% in afternoon trading. So you've got a giant institutional buyer stepping in. You've got a Wall Street upgrade. You've got the confirmed leadership position over BlackRock. And then Saylor takes to X and posts, "Winter is over. Bitcoin is holding above $78,000, and the market is starting to listen." Now, let's talk about the risk, because this is the part nobody is saying out loud. Strategy's own investor presentation confirms something every Bitcoin holder needs to know. If Strategy's market cap ever falls below the value of the Bitcoin it holds, that's called the MNAV ratio, the company has stated it will start selling Bitcoin. That ratio just recovered to 1.0. It spent weeks below it. So the same company that's become Bitcoin's biggest buyer could, under the wrong conditions, flip into Bitcoin's biggest seller. Strategy alone now controls about 76% of all Bitcoin held by public companies. When one entity holds that much, their financial health becomes the market's financial health. Don't ignore that. Now zoom out. Why does any of this matter for your stack? Because Bitcoin's supply dynamics have fundamentally changed. Miners produce roughly 450 new Bitcoin per day. That's it. That's the entire global supply hitting the market every 24 hours. Strategy alone, through their STRC program, has bought about 77,000 Bitcoin in 2026. Do the math. They're absorbing months of mining output in single-week buys. And they're not the only ones. Over 140 public companies now hold Bitcoin on their balance sheets. ETFs are absorbing supply. Sovereign reserves are quietly building. The US government already holds around 300,000 Bitcoin. El Salvador buys daily. The UK government and several US state pension funds have started allocating. This is the institutional era Saylor has been talking about for 5 years. And it's happening whether the price is up or down. That's the key shift. The old Bitcoin cycles were driven by retail euphoria and the 4-year halving. The new cycle is being driven by capital flows from balance sheets, ETFs, and eventually nation-states. Saylor and analysts like Maddie Greenspan think the next leg up will come from central banks adding Bitcoin to reserves alongside gold. If that thesis plays out, $78,000 is going to look like a gift. But there's a counterweight you need to respect. Bitcoin's correlation with the US dollar index just hit negative 0.90. That's the most negative reading since 2022. In plain English, when the dollar is strong, Bitcoin struggles. About 81% of Bitcoin's recent short-term price moves are tied to the dollar. So macro matters. Iran tensions, oil prices, Fed policy, treasury yields. These are Bitcoin's daily drivers right now. Bernstein still has a year-end target of $150,000. Other analysts, like Anthony Scaramucci, say a real recovery may not arrive until October or November. Both can be true. Here's the takeaway. Strategy taking the top spot from BlackRock isn't symbolic, it's evidence. Evidence that institutional Bitcoin demand is real, persistent, and growing through drawdowns. Saylor's "winter is over" call might be early, it might be right on time. But the structural buying is happening, the supply is being absorbed, and every cycle the holders who win are the ones who recognize the shift before the headlines catch up. If this kind of breakdown is what you want, Bitcoin only, no altcoin noise, real numbers, real analysis, hit subscribe right now. We do this every single day. And if you want to see exactly what your Bitcoin stack could be worth at retirement, head to bitcoinmaxing.com. We've built a free Bitcoin retirement calculator that runs the projections for you, plus daily Bitcoin resources to help you stack smarter. That's bitcoinmaxing.com. Link is in the description. Stay humble, stack sats. I'll see you tomorrow.